Transitioning from a homeowner to a real estate investor is one of the most effective ways to build long-term generational wealth.
Oh.
Unlike a primary residence, lenders typically require a larger down payment of at least 15 to 25% for an investment property. You should also expect the interest rate to be slightly higher than a standard mortgage because the bank views rental properties as higher risk. One major advantage is that many lenders allow you to use 75% of the MOI projected rental income to help you qualify for the loan. This projected income can offset the new mortgage payment and improve your debt-to-income ratio, making it easier to get approved. If you don't have the cash saved up, you can often use a HELOC or a cash-out refinance on your current home to fund the down payment. It is vital to ensure the property will have a positive cash flow after accounting for taxes, insurance, maintenance, and potential vacancies. By mastering these specific investor guidelines, you can confidently purchase your first rental and start your journey toward financial independence.